FX Ancient, what's up guys? Welcome back to the channel. Welcome back to another video. And in the last video that we talked about trade guides, I talked about a specific type 3 trade guide that I shared with you guys. And wouldn't you have it that today we ended up getting 3 trades that literally follow that exact same trade guide. So I wanted to make this video to basically break down those 3 trades and show you how you can use the trade guide to actually see these trades through. And let's take a look at all the different confirmations and things of that nature that way we can use and you can better understand how the trade guide is used. So without further ado guys, let's get this started. Alright guys, so the first trade setup was on pound Swiss. So first things first, let's go over to the 1 hour chart real quick so I could show you this. And you can see that we're coming off of a peak formation low, so we're looking for buys. Right, so I'm only interested in looking for buys. We end up coming to this session here, yesterday's London session, and basically what do we get? You can see that we end up getting a 26 pip Asian range, and then we go from the middle of the range up to the top, and then we start creating 4 solid bars that's literally hitting the middle of the range and pinning to the 50 EMA, going in our directional bias. All right, so basically these 4 bars are a quarter wood. So that is our trade pattern signal that we would want. Confirmations of the 50 EMA right there to hold price. You can see also on the TDI, we're coming and bouncing off the 50 as well. So those are all good confirmations. Directional bias, the pattern, the timing, TDI, all these things come together as one in the trade guide. What is the actual entry? The entry of this trade is basically after the quarter wood. So after these 4 bars, which produce the actual quarter wood pattern, you get this candle here. Typically, we want this candle to produce what we call a pullback, because a pullback allows us to get into the trade at a better position. Essentially right here on this candle provided a very nice pullback. So anywhere in this pullback here, you could get into the trade on a buy. You could see that we're only risking about 13 to 12 and a half pips on this trade. And as you can see, we get over a 2-to-1 risk to reward ratio in literally 1 candle, and it's done and over with in 45 minutes. All right, now if you happen to miss this trade, you kind of got lucky if you were paying attention, because it came right back and retested and gave you another pattern to enter, which is a railroad track here. That's also pinning to the middle of the range, and the 50 is again there holding price up. Now also on the TDI, we're bouncing off the 50. Same scenario here, where on the very next candle we actually get a huge pullback. So literally anywhere in this red candle is where your entry is going to be. So if you decided to enter here, then the trade setup is going to look like this. If you decided to enter all the way down here, then your trade entry is going to look like this. So very little risk and a huge reward, because this went up 75 pips easy. So depending on where you got in on this trade, you're looking at a 7-to-1 risk to reward ratio And I saw even a 17-to-1 risk to reward ratio on a trade like this. 2 examples on the same pair during the same session. All right, let's take a look at another one. All right, guys, so here we have pound AUD, and same thing. Let's go up to the 1 hour time frame. We're coming off of a peak formation low, so again, we're looking for buys. And here we go with the buy option here. Same thing, 69 pip Asian range, by the way, pretty big Asian range. But notice this. You notice how price action is coming out of the middle. Okay, it's coming out of the middle into the London session. This is not what we look for in a type 3 setup. So we had to wait for price to actually hit the top and then come back down again to get pinned in the middle of the range. And of course you could see the 50 EMA right below it to hold it. You could see the TDI there also bouncing off the 50 line as well. So where is our entry on this trade? So the entry is going to be basically after this star pattern here. Okay, so after this star pattern on this actual candle is going to be your entry. Now, this candle didn't really give us that much of a pullback. So really you're entering right after the candle. Now, because this is pound AUD, we have to use a bigger stop loss, or we are able to use a bigger stop loss on this. So the stop loss is going to be about 24, 23 pips, depending on what the spread is at that particular time. But you could see that you easily got over a 4-to-1 risk to reward ratio on this particular trade. Okay, you even got a continuation trade here in the New York session, again off of another star pattern that's also being blocked by the 50, which is also being blocked by the 50 line on the TDI as well. So 2 trade setups on pound AUD back to back. Now, the reason that our entry was not here and we had to wait for this to happen is because I do not take any kind of type 3 patterns that come out of the middle of the range. For me, they have to go to the top or they have to go to the bottom and then get rejected by the middle. All right, so that's why I waited for this particular setup to appear. If this did not come back down, then I would have missed the trade and this one would have been caught. Okay, but again, following the trade guide that we just talked about in the last video is why this is important for consistency. And the last one here was pound NZD, basically the sister or brother of pound AUD. And same scenario here. We are coming off the top of the Asian range and then coming to the middle of the range, getting rejected here on a railroad track, and then also the 50s right there, and then we're bouncing off the 50 line as well. On this one, same scenario. We're coming off peak formation low, so we're looking for buys anyways. So we have our directional bias, we have our pattern, the timing is correct, and so the entry on this is literally after the railroad track. You can enter in on the slight pullback or literally right after the railroad track. You can see the stop loss is about 22 pips, and on this particular trade you'd be getting anywhere from 5+ to 1 risk to reward ratio, depending on how long you held it. But if you just want a 2-to-1 risk to reward ratio, you would have been done literally in about 45 minutes and you would have gotten 46 pips or so. Okay, but it's very ironic that we ended up getting the three setups literally about the trade guide that we just talked about in the previous video. So if you haven't watched the previous video, please go back and watch the previous video to this one. All right, so I hope that you can see why creating a trade guide could really help you stay consistent, because if you just literally follow the rules in the trade guide, you'll be able to get very consistent setups over and over and over again. The only thing you have to do is literally wait for the setups to appear. That's it. You have to wait for the setups to appear. They're not going to appear every day, but when they appear, believe me, they will pay off. All right? So guys, thank you so much for watching. And guys, if you need any more help, please join us on FXN Plus. We have just about another 2.5 weeks to go for the special on FXN Plus, which is getting the Blueprint Summit videos available to those users who sign up within the next 2.5 weeks. All right, guys, if you need any more help, join us on FXN Plus. We have weekly sessions every single week, every single Sunday. We have them Q&A sessions. We talk about the upcoming week and everything like that. You guys can ask as many questions as you want. And most importantly, we're just there to help as a community. Enjoy this week's trading, and always trade safe and trade consistent.